Hello guys, I hope you all are doing well. Today we are going to discuss balance of payment. Balance of payments. Composition. Disequilibrium. First of all, what is balance of payment? So what is balance of payments? What is the definition? It definition says that it is the economic transactions between residents of a country, residents or government of a country with the rest of the world, the rest of the world during a specific period of time. Yeah, during a year, we can say. Economic transaction means, what does this mean? It means transactions of goods and services, unilateral transfers, capital inflows or capital outflows. It can be anything. So it is typically a monetary transactions. For example, transactions of goods and services from India to US, or it can be unilateral transfer in donations. For example, a person went to Canada or US and then he is earning income there and sending to their parents. That comes under the unilateral transaction because they are one-sided transactions. Okay, this is typically a definition of balance of payment. Now let us discuss about composition. What composition means? What does this means? In balance of payment, there are three type of accounts we study. Sorry, two type of accounts we generally study. One is current account, and the second is capital account. In capital account, change in assets and liabilities, assets and liabilities of a person or a government. What does assets and liabilities means? For example, you invested in some other country in terms of FDI or FPI. That comes under assets. For example, you invested. What does the difference between the FDI and FPI? FDI meaning foreign direct investment, in which you have control on your assets in the foreign country. But in the FPI, you don't have control on the assets in the foreign country. This is the basic difference. And then comes loans and borrowings, FD and FPI, loans and borrowings. Okay, so it can be anything if your country is taking loan from the other country or borrowing from the IMF, etc. So it comes under this capital account. In current account, what we study in current account, transaction of goods and services, transactions of goods and services, and unilateral transfers. Unilateral transfers. Okay, now let me inflow inflow of goods termed as let us discuss on the next page. Okay, so here goods, services, unilateral transfers. Okay, inflow of goods, inflow of goods termed as positive, inflow of services termed as positive, inflow of unilateral transfers in terms of donations, one-sided transfers, transfers, one can say unilateral transfers also. Okay, then inflow of these termed as positive in the balance of payment account, and then inflow also we can say imports of goods termed as positive, imports of services termed as positive, and imports of unilateral transfer comes under the positive side. When we do exports of goods is positive, exports sorry exports of goods termed as negative in the balance of payment section, negative for the services and negative for the unilateral transfers. Okay, from here we can say current account of goods, current account of services, current account of unilateral transfers. Okay, so combining these three, here comes aggregate current account. Current account. So when we can say that current account surplus and deficit, surplus and deficit. Surplus is the situation when surplus is when aggregate inflows are greater than outflows. It means that in a particular year, foreign currency or inflows of goods, services, unilateral transfers are more than we export to the other countries. That means inflows are greater than outflows in a year, and the deficit means when outflows are greater than surplus. And there is two type of balance of payment. One is the accounting sense, and the other is real. In accounting sense, balance of payment is always in equilibrium. Always equilibrium. And in a sense, not in equilibrium. Okay. Mm, then we talk about what is autonomous items. Autonomous items and accommodating items. In autonomous items, we generally take current account, capital account, but here we only take goods and services, unilateral transfers, capital inflows, capital outflows. In autonomous, the transactions undertaken only to earn profit, only for the purpose of profit. But here there is no need and no motive to correct the balance of payment deficit or surplus, but accommodating items are only used to correct the BOP deficit. In this, uh, like in accommodating items, borrowing from IMF, government borrowings, inflow outflow, exchange reserves, the country's reserves, flows and outflows, exchange reserves. So balance of payment disequilibrium. What is the situation and how to correct it? First of all, when autonomous receipts are greater than autonomous payments. When credit is greater than debit, it generally means when balance of payment is surplus. Surplus. Okay. When balance of payment is surplus, it does mean that accommodating item will increase. Accommodating items increase. In simpler terms, we can say that our exchange reserves will increase. Foreign currency reserves of India will increase when there is balance of payment surplus. And the other situation is we can inverse the same situation when autonomous payments are greater than autonomous receipts. In this situation, balance of payment will be in deficit. Okay. When this will be the situation, then accommodating items will decrease. Will decrease. Okay. Then when we talk about overall balance of payment equilibrium, decided from the current account balance and capital account balance. Capital. Okay. When there is surplus in capital account and cap surplus in current account and surplus in capital account, there is balance of payment surplus. When there is a deficit in current account but surplus in capital account, and when when surplus is greater than deficit, then there is balance of payment surplus. Okay. When there is surplus in current account and deficit in capital account, and when deficit are greater than surplus, then there is balance of payment deficit. When there is deficit in both the accounts, then there is balance of payment deficit. I hope you guys enjoy the lecture. If you enjoy the lecture, please do like, subscribe, and share the video. We will come again with the best content and the best videos. Thank you guys.